This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now let's take a look at the gold market. The gold market situation is a bit, at my view, is a bit easier than on the forex market and on the euro currency, because market is showing now the really straight move to the upside, and that is could be seen also on the weekly time frame. But what is more significant is that this upward action is not just some action that is not based on something significant events. It's pure technical. Absolutely not, because if you take a look at the recent data as the at the thought that we have discussed within the couple of months already, that market is really overextended to the downside. Now major market participants starts to change the sentiment of the market. S&P senior analysis tells that market has passed through the significant resistance at 1350 area, and now in a long-term perspective could reach the 1550 area. Well, that is in general our thoughts as well, because previously we have discussed that market could retest the broken consolidation on the monthly time frame. And in general, if you will take a look at the weekly time frame and the higher time frame analysis, and you will read our fundamental part of the research the recent weeks, you'll see that our thought is to expect some deeper continuation to the upside. Also, currently the trend gradually shifting to the bullish. I speak about the seasonal trend on the gold market, and overall a lot of different moments add each other in the moderate bullish picture. Also, what is really significant on the gold market is that the outflow from the major ETF funds, for instance the SPDR fund, gold market fund, gradually slowed down, and market has lost only the 0.3 tons of the gold. That is really very small outflow compared to what we see on the previously 5 ton of golds, 9 ton of golds per week. That was really significant outflow. Another significant new event is that Goldman Sachs was the most active buyer of the gold within the recent month. They bought approximately 350 ounces of gold. That is really significant amount, and that also tells something, because they are not purely the, if you could call it, long-term investors. And the position of the Goldman Sachs is a bit different compared to the, for instance, Paulson fund, SPDR fund. That is a bit different. And that also, with this overall environment that now stands around the gold market, I see some confirmation from the fundamental issues that this reversal on the gold market is not just occasional retracement that based only on some technical oversold or something of that sort. It really has some foundation. That's why this gives me the confidence to believe that this upward action should continue. So if you'll take a look at the short-term perspective on the daily time frame, we see very nice upward action. Market has nice momentum. The trend here is bullish as well as on the weekly time frame. And in general, we see that in general the market context is bullish, but market has hit the significant resistance cluster. That includes the lever bot, the target of this pattern, A, B, C bottom, 618 minor extension. Also, that is the monthly pivot resistance 1. Maybe this also could be the some fib resistance level. I didn't check it, because if you will take a look at the weekly time frame, you'll see that there's a lot of swings to the downside, and that could give us a lot of different fib levels. And probably here also could be some kind of the fib level, but that just tells us that we can't enter long here. Speaking definitely, actually we have the Jordan stretch context. Market at oversold at the minor target and the resistance. It's not the pure stretch, we do not have the Fib resistance, but in the nature of this current situation is the stretch, the bearish directional pattern. Well, I can't call you to take the short positions because we speak now about the trading on the daily time frame, and based on the daily time frame analysis, we just need to wait when the retracement will be over and wait when market will show the bounce to the downside that we could use for entering on the long side of the market. That's the core of the daily analysis. If you're a scalp trader, you have the skills to trade on the intraday charts, and if you have skills trading on gold, such patterns as the stretch, well, that's no problem. You could try and catch some reversal pattern on the 15-minute chart, on the 30-minute chart, and trying to trade this retracement down. But I can't call you for that because that is a bit different analysis and different term structure. That is lower time frame scalp trading, but now we are talking about the trading based on the daily time frame. Thus, on the daily time frame, we need to get the bounce down and trying to use it for entering on the long side of the market. Now let's take a look at the lower time frames and the 4-hour time frame. On the 4-hour time frame, we do not see anything interesting. One thing that I see here on the hourly time frame. On the hourly time frame, first we need to get the pattern that could trigger the move down, and here you see already that this swing high stands at 127 extension of that retracement. And what is more interesting, we have the exhausting action. You can see the divergence with the MACD, but this is not just the divergence somewhere. This is divergence right at the significant daily resistance cluster. That makes this divergence valuable, and that divergence should be and has to be taken into consideration when you await some bounce to the downside. Now, so maybe this here could appear some different patterns. For instance, that could be wedge pattern. The market will break it to the downside. That could be head and shoulders, 127 head and shoulders. That's also possible. So maybe something of that sort, some other patterns could appear. I'm now speaking about the potential scalp trade for the scalpers. Well, speaking about the depth of this retracement, on the daily time frame we see all significant levels. Well, to be honestly, I prefer to see the retracement right to this area, to the 1330, 1340 area, because that is weekly pivot support 1, and that is previous swing high. Okay, that is nearest Fib support. Actually, market has hit only minor target, and expect some too extended retracement down after hitting just minor targets will be not quite reasonable from the bullish perspective, because after hitting the 618, then 3-8 retracement of the most recent swing is a normal. But if market will show some deeper retracement, that is not quite normal if market is really has intention to continue move high. That's the first moment. Second moment, it will be perfect if market will find some ability to hold above the broken highs. That will be just the perfect picture, because market just broken it, retested, and continue move high. That is absolutely, even from the theoretical point of view, absolutely perfect picture, perfect development of the situation. And finally, the third moment is the weekly pivot support one. When the market stands with the long-term bull trend, usually at any retracement, if weekly pivot support one holds the retracement, it tells us that trend is still intact. That's normal when the market retraces to the weekly pivot support one. Extending this move to the downside will be the warning sign. That's why the first primary level to watch for is right here. Maybe if market will show retracement to the counter support, that will mean that will not be a strategy as well, but that will be a bit more nervous situation, because some thoughts could appear that market has moved below the previous swing, broken highs. What does it mean? That probably could mean that market is not as strong as it seems previously. Well, that just a bit increase the warnings about the possible weakness of this upward action, and we do not want to see. So our task in the beginning of the week is the wait retracement. When the retracement will be over, and I hope that this retracement will stop somewhere in this area around the weekly pivot support one. Here in our daily researches we will start search the reversal patterns and pattern that could let us to take long position with a possible upward continuation. That's our trading plan for the coming week on the gold market.